Hello traders, welcome to your market update for Monday the 23rd of March 2015. It's the start of a new week and one that is going to be relatively quiet in terms of key economic data, but nonetheless I'm sure that there will be some market moves for us to take advantage of, and there is still going to be plenty of speculation around the US dollar. As we've seen last week, there were some massive moves, however they were in both directions, as we've seen a huge short covering rally coming from the initial move, and then we had a big pullback on speculative trade. So it's been quite an interesting few days of trading at the end of last week, but we did have a little bit quieter of a session, I guess you could say, on Friday, but the US dollar did come off quite a fair bit in terms of historical data, and the move was quite surprising to myself and a few other traders, just to the extent that the US dollar came off. Now, what it's emphasizing to us is that volatility is still remaining within the market. So we are still seeing some large moves that are quite greater than what would be expected, and that's due to the large amount of speculation. The US dollar and the interpretation of the Fed's minutes continues to be a roller coaster of emotions for the market, and even for some of the Fed committee members. Now, I haven't done a report since we had some comments from Fed members such as Lockhart, Evans and Fisher, but let me just quickly highlight to you that they were mixed from all of those guys. So within the Fed committee, there is still a huge amount of inconsistency with the personal views and the direction. So Evans emphasised last week that he prefers a rate rise not until 2016. However, Lockhart is also known to be quite a dove, and he's happy with June, July or September rate rises. And Fisher, being the hawk of the Fed, he wants to raise rates right now. So you can see that there is a vast difference between three members that all had speeches at the end of last week. And then we have Williams up tonight, and we'll see what he has to say. I do think that we will see, and Mester also coming up soon, but I think we will see a move on the back of some existing home sales data coming out, and also the market trying to figure out where it wants to go with the US dollar. Now, overall, I'm a bull on the US dollar, and I think that we will see higher levels as the market starts to price in an impending rate rise at some point. We just need the market to decide on when that rate rise is likely. Right now, the bonds market and the interest rate markets are all pricing in a rate rise in November. So they're sitting on the fence somewhat and saying that it will be this year, but they're being between the most popular vote for September, and they're getting closer, pushing it out to being also on the fence in terms of maybe it's early next year. So even the Fed, even the other parts of the market are pricing in quite an indecisive conclusion as to when the Fed will raise rates based on the speech from the Fed last week. So we need to look forward, and we need to be quite patient in trying to work out where the markets are going to go and break out of quite wide ranges. I'll get into some charts as we don't have a lot of data here tonight. As you can see, we'll have to see what Draghi says. It may be a non-event, and I'm expecting that to be the case. And I think the US dollar is still the story leading into the start of this week that the market's going to try to figure out. Now, let me try and get rid of this. If I can show you here, that's a 5 minute, that's no good. I'll show you the daily chart. And we have seen a big fall, then we had a short covering rally, and then on Friday we had the big fall again. We are still within very tight bands and ranges, and we're getting narrower and narrower higher lows and lower highs. So we are going to go into a consolidation pattern in my view, and then eventually break out at some point. I'm not going to preempt that we will be breaking out to the high side, but that is what I'm favouring, and I won't be placing trades now because we're at a lower end of the band hoping that it bounces, but waiting for the market to show me where it wants to go before I get into long-term position trades. For now, I'll be scalping and looking at some shorter time frames. So I don't mind looking at the hourly, and as you can see, we had the big fall. This is Friday, and then today we haven't really gone anywhere, but we've got in higher lows, and we could find some support off these and then just grind a little bit higher. The big psychological level of 100, it needs to close above that before I get too excited. It's a psychological figure as opposed to any major technical or I should say fundamental reason. So we'll have to see what happens there. Now, if I had to get rid of that and we look at some charts, I'll start off at the New Zealand where I normally do, and you'll see that it has broken the previous double top that we did trade through this period that once was resistance, which once was support and once was resistance, now has been broken through as well as the downtrend. Now, that's quite a big move, and I'm very cautious on this and keeping an eye on it because I want to see what happens at the close of today. Could today's little spike and little move just purely be a false breakout where we look at other charts and we haven't taken out major levels like the New Zealand has? So I'm not sure exactly yet whether I am willing to place bullish trades on the New Zealand versus the US, just based on the US consolidating, and we could get a breakout at any point. But technically we are in a bull trend now. We do have a higher high, we have got a broken of the trend line, and we do have some higher lows, and it's a very significant move. So we could see the market actually come up and trade into this region here. It's something we need to be mindful of. And I'm just waiting for a little bit more confirmation before I jump on that bandwagon. And I'll look at the other charts for also indication of what the US dollar is doing before I choose the New Zealand versus the US as a lone ranger. If we look at the Australian dollar, as you can see, it's still below this major resistance level, and that's something that I think we could see. We've had the very similar moves here last week. This is the weekend where it did nothing, and today we've had a little bit of a run, nowhere near what the New Zealand has, and as you can see, we are still below that level. So if we get a break above here and we trade up into this area, we could see some profit taking on the US versus the USD, and that breakout, well then that should definitely lead to some higher prices on the Australian dollar. But overall, the Australian economy, I don't see it as a long-term move, and I'd like to think that at least that resistance level, or definitely the 79-cent level, should hold in the near term. Now, I do have a trade on, and that's on the Australian versus the New Zealand, and it's one that I got in up here, and we've been trading the downward channel. So you'll see I've just had a black line in where I got in over here, and I've held it now for a number of trading sessions, but we are up a couple of hundred pips, and I am looking to get out just before it moves to the bottom end of this channel, but I will definitely be out before I expect it to test the $1 parity level, as that's a major psychological level. So if you are following that trade with me, that's just a quick update of where we're at. Stop losses have all been moved right down, and we've locked in a bit of profit down into here. And in the future, I'll be offering a trading service where you will get all of my trades live and access to a webinar before every major session, being the London and New York session. And I'll be talking about all the trades that I've done and all the trades that I'm doing or looking to do as per the live private Twitter feed. So keep an eye out for that, as that will be coming in the future, and hopefully you can make some money alongside myself. Let's have a look at the Great British Pound. Once again, very controlled by the US dollar, actually gone nowhere, but we do have two very significant resistance levels and support level right here, and we need a breakout of these two before we start to embark on the next major trend. So I'm keeping an eye on these major levels, but between here and here, there are opportunities to scalp, and you'll need to move to some shorter time frames, and you'll need to get into scalping mode there, as the market will drift around. So maybe you could pull out some scalping techniques. Some scalping techniques I'll be sharing with you during my subscription service. The euro is still within the downtrend, and we are moving into this consolidation phase. You'll see we've got an uptrend, we've got a major downtrend, and the market is contained within this. Now, we could go into consolidation phase this week where the market is range bound for the euro versus the US, like the Great British Pound and potentially the Australian. It all depends on the US dollar. So keep an eye on your index charts there for the US dollar, and If we get a breakout, well, then that's when I'll be placing some longer term trades. I still believe the downside is the preferable trade, and we could get the market come up, test this trend and some resistance levels and reject it and get pulled away with US dollar strength, as well as the continuing dramas in Europe. The US versus the CAD's been quite interesting. It's had a pullback, and then the bounce on the US dollar, and then Friday we had a pullback. We're still testing the downtrend line of this previous breakout pattern that we had, and I think that we will find support at some stage and then continue higher along with the US dollar index. Now, oil also plays an important role in this, and we have seen oil being quite volatile within a range as well. I'll quickly duck over to that for you. So this is the oil chart, and you can see there on the, I'll go to a 4-hourly chart for you, it's a bit clearer. You'll see that we had a big rally with the news from the Fed, then we had a pullback, and then we have a rally, and then we've had a pullback, so it's been quite whipsawy, and that is reflected in the US versus the CAD, as well as the same pattern has been going on with the US dollar. So it's been quite volatile, and there's some pip movements there, but I think ultimately we are looking for a US dollar support and the market to realise that ultimately the Fed will raise rates and be the first developed country in the world to do so since the GFC, and it's quite a large milestone, and it will have impacts on other economies. So we'll keep an eye on that. The US versus the Japanese yen, we're still within this uptrend. Yes, we did have a pullback and we have stabilised around this area, and we may consolidate somewhat. However, I do expect that this support level here to hold. Now, we all have support and resistance on all these major charts due to that US dollar spike. So they are key levels that I'm looking for across all the charts to see when they are breaking, and is there some sort of pattern there where all of these time frames are being broken at a similar time, indicating whether there is a US dollar weakness coming into the market. Also following fundamentals as well, of course, because there needs to be a fundamental story and a reason why the market is dumping US dollars, should that ever be the case coming up. So they're the charts for today. We are looking at scalping. It could be a very quiet market. Keep an eye out for the speech. Keep an eye out for, Draghi's speech. Keep an eye out for the speech from Fed ministers, and also the housing data. I'll be back again tomorrow for this video, and until then, trade well.